Hey, you guys, thanks for listening in to this episode of Tips with T. On today, I have Miss Alicia with us. Hey, Miss Alicia, how are you doing today?
I am wonderful. How are you?
I am doing well today. Thank you so much for being a guest on the show. So tell us more about yourself and what you do.
So, my name is Alicia Stukes. I am an associate broker. I'm licensed here in the state of Maryland as well as the District of Columbia. And I am with a phenomenal brokerage called eXp Realty. And we are all online basically. Our brokerage operates off of 100% technology. But let me just get back to about me. So I've been licensed since 2003 and I provide a high level of customer service. I bring a experience to my clients that is not only an experience of the home buying process, but one of education as well. Because I believe that during the home buying process, it should be one where the home buyer, whether first time or seasoned, will enjoy the experience, not have buyer's remorse, but also to be educated about the process. I also am a notary in the state of Maryland, and I am also a certified counselor with Credit Smart, with this Credit Smart program. So I facilitate that at community events just to share with consumers what they need to know about credit, how they can fix credit, how they can be better stewards of credit. And it usually is a win-win because most of the attendees for the Credit Smart workshop are looking to become home buyers. So it's just an awesome thing. And I will also say that I am all things real estate.
Mhm. Well, that's awesome. So can you actually walk us through the process of buying a house? What does that look like? What should we prepare for beforehand? What can we expect during the process that some people are really not aware of when they're actually looking to buy a home?
Oh, absolutely. So a lot of home buyers think that the process begins with them jumping in their car to go view properties. And that's actually not the beginning of the process. The process actually starts with the prospective home buyer really taking a deep dive look at their credit and
Mhm.
making sure that they're credit worthy, and then also taking a deep dive into their finances to
Mhm.
make sure that they have the actual cash that they're going to need to close on their property, but also to pay the upfront costs, like for their credit report that the lender's going to require, for the home inspection, for the termite inspection, and for the appraisal. So when I'm doing my home buyer consultation, the first thing that I do is sit down with my prospective buyers and we discuss credit, we discuss cash, available cash for them, and then we also discuss what the expectation is for both parties, roles and responsibilities, for me as their agent and for them as the actual client that's seeking to become a homeowner. And then once we've taken that deep dive with their credit, looked at their finances, I get them connected with a lender. The lender will then take a look at their credit and say, yep, they're ready to go. Or they may need some more work, maybe some more massaging. You need to do some massaging there. They may look and say, hey, just looking at what you have as far as liquid cash or cash flow, we need to put some more money in the bank, or we need to tap into your 401k just to see what funds may be available there. But that's really the second part of it, getting them connected with a lender so we can see exactly what their purchasing power is. You can't go window shopping in real estate. It's not a good feeling. Okay, so we want to make sure that they're qualified and ready to go. Because one of the principles in real estate is to make sure that you have an able, that's capacity,
Mhm.
willing, and ready buyer. Okay, then the next thing we're going to do is after they met with the lender's going to identify exactly what type of mortgage they're going to qualify for. If they qualify for FHA, that means that the buyer is coming out of their pocket with about 3.5%
Mhm.
towards the transaction. That is basically their closing costs. If they're put into a conventional product, they will pay more money as a down payment as well as closing. So determining that as well on the front end basically sets the buyer up for success with completing their transaction, because they're going to get a general idea exactly how much they need to have available for this transaction. Then once we've gotten them pre-approved, yes, that lender will issue a pre-approval letter based off of that front end work of looking at credit, looking at cash, looking at employment history, all that good stuff. We are going shopping. That's when you actually hit the bricks, get in a car, go look for some properties that are within your buying power. And once we have seen the property that is your forever home, then we go into writing an offer. Your offer gets accepted. Your offer will get accepted with conditions and terms. Conditions for your accepted offer will be the settlement date. When are we going to close on this property? It will be the earnest money deposit. That is the amount that you're putting on in escrow to say, I am serious, I really want to purchase this home. The earnest money deposit should be minimum 1% of your purchase price. Okay. Other conditions will be, we want a home inspection. If there are any amenities with the property, say it has a pool, you want to get that pool inspected. If it's a property that's well inspected, not tied into the public sewer and water, then we have to get the well inspected. We have to get the septic inspected. And most importantly, termites. Most lenders will require a termite inspection. So you have to get that done as well. So inspections are a part of the conditions as well. Another condition would be the appraisal. The lender is going to say, this house has to appraise at the amount that you want to offer. If not, then we have to go back to the seller and say, we need you to lower the price or release us from the contract. Okay. Then the other part, after appraisal, another condition may be that we ask the seller to give us some assistance with closing costs. Mm-hmm. That's a condition, or we call that a concession. So that's a part of the home buying process. So we've submitted our offer, it's gotten ratified, we have a ratified contract. In that ratified contract, we've asked for these things, terms and conditions, so on and so forth. Then we go through the checklist of all of those things that are conditional. We have the home inspection, we have the termite inspection, we get the appraisal, everything comes back great. We release the conditions because they've been met. And then we ask the lender, hey, are we ready to close? The lender will basically make sure that buyer has met all of the conditions of the lender or the underwriter who's actually doing all the back end work. And then we get that thing called the clear to close. We're at settlement, the buyer gets the keys, and we are happy campers. And that within itself is just a quick overview of the home buying process.
Wow. So it's a lot. So it's nothing that people should play with. If you're really serious about buying a home, you need to be serious. A lot of people too, they will come and they'll ask me certain questions about it. I know a little bit about it, but not much as in depth as you do, because of course you're a real estate agent. But I know I do tell people to, with their credit is very, very important, especially when it comes to the interest rates and things of that nature. Mm-hmm. And then also knowing your debt to income ratio.
That's
a lot of people don't get approved because their debt to income ratio is kind of considered high. So trying to teach people about that, to be mindful. So it is a process. I mean, it's a fulfilling process because everybody wants to own and buy their own home, but you still need to know what to expect during the process. Because some people think it's just not a big deal, but it is a big deal. Because some people not being aware and know the process, might not have a good agent like you and get taken advantage of and lose money, like their earnest money and stuff on a house because they didn't know. So I feel like you should at least know the process at least, or get a type of understanding so you won't go in blindsided.
Absolutely. Let me throw this little nugget out there. And it basically impacts you as a tax preparer, but also me as a realtor. So I had a client recently who got pre-approved for purchasing a home up to $500,000. Mm-hmm. That was pre-approved. Now the pre-approval process is where the lending the loan officer is doing a snapshot of your credit and your employment history, making sure that you meet the basic conditions to apply for a loan.
Mm-hmm.
So the client met the basic conditions. The buyer was initially pre-approved for $500,000, but once she submitted her loan application and the underwriter was able to take a look at her tax returns, she had a lot of write-offs. So she started off with an income that was six figures, but by the time they looked at her 2 years worth of tax returns, it basically took her income down to five figures because she had written off so much. Mm-hmm. So I say all that to say, when home buyers are looking to purchase homes, you have to also take into consideration your tax returns, exactly what is going to be your income once you do any deductions from it, because that's going to have an impact on your buying power as well.
Right.
Yep.
And a lot of people, they don't know that. They don't realize that, your tax returns too has to be up to date and current when you're going to buy a house or you're going to buy a home. Also now they're actually making people verify that the actual tax return was transmitted, because some people had been falsifying tax returns. So they're actually making sure it was transmitted to the actual IRS. That's your actual tax return. And they might ask you to even get a transcript from the IRS to make sure it matches, because so many people have been doing fraudulent things with their tax returns. So be aware. Be aware of that. These lenders, they're not playing about lending you their money for this house. They want to make sure you're going to be able to pay it back.
Absolutely. Yep.
So, what are the best type of real estate to consider when you're investing, like the duplexes, single family homes? Which kind of ones are really, I guess, the high market or high demand?
So honestly and truthfully, it really depends on the area, the market, where you are. So here in Maryland, and I'm specifically very close to the DC area, we call it the DMV area. So investors will snatch up townhomes, single family homes, and even some condos, but it also depends on the investor. So if you have an investor that's looking to do flips, a lot of times they're going to get the single family homes and the townhomes. But if you have an investor who wants to buy and hold, they actually want to become a landlord, they will get townhomes, single family homes, and condos as well. Because in this market here in the DMV area, all of those real estate structure types will generate a nice rental income for them. Mm-hmm. So it totally depends on the market and the area where you are.
Yeah, so I know, for instance, like around here, a lot of, especially like on the beaches, it's more so the townhomes that are that are very high in demand, especially the ones that's closer towards the ocean. Mm-hmm. Very high in demand. That's what a lot of people want to go there and retire. So, I mean, it's good to actually know what area that you're in and what market it is, to see which one is the best to invest in.
Absolutely. Yep.
So, Miss Alicia, so I really have to ask you, we're going through this pandemic. Is this pandemic a good time to purchase a house? Is the market okay? Like, how is this affecting the housing market or the real estate market?
Honestly and truthfully, COVID-19 really hasn't had a huge impact on the market, meaning to say a loss of sales. We did have a shortage of inventory, so not enough homes to put the buyers in. Yes, exactly. Yes. And so what happened was, when COVID really kind of really hit and we were in the real thick of it, so talking about March, April, May-ish time frame, the inventory was, kind of on the low side, and actually was low even prior to COVID really hitting the USA, which was in January. So go back to, December, holiday time, fall time, it was even a lower inventory, during that time period as well. Mm-hmm. However, as soon as, and I'm not exaggerating this, it seems as though as soon as we got into the month of May and really got past Mother's Day, the market just flooded even with more buyers. Mm-hmm. So literally the buyers just came out running. What local jurisdictions had to do, and they did this very swiftly, was put safety protocols in place to protect the public. So, it basically stated that during showings, it can only be a certain number of people in the house at the time doing the showings. They needed to wear masks, they needed to wear gloves, and we even took a extra step here in Maryland initially and requested shoe coverings, foot coverings, using wipes and so on and so forth. And as we progressed on, it was okay, we could take away the shoe coverings. We don't really need those, but we still want to make sure that we have the face coverings. And, I still provided my clients with gloves as well. And I keep, what I call my run and go kit of PPE. So I had the wipes and all those things for them. But the home showings did not cease. They have increased, if nothing more. And we're seeing sellers really putting their homes on the market as well. So yeah, now is a good time to purchase. And the reason why is because the rates are still really low.
I was going to ask you that, like, how has that affected interest rates?
The rates are still really low. And here's the thing, the rates can change every day. Yeah, people need to understand it. The interest rates are still very low. It's a great time to purchase. Again, you're talking about, 3.14 interest rate. My clients who closed at the beginning of July, they had like 3.23 as an interest rate, which was awesome interest rate for them. And I always tell all of my clients, shop your rate. When one of my clients who just recently closed, just referencing at the beginning of July, they started out with one lender, and I think within 2 weeks' time, they switched to their credit union because the credit union was able to give them a much better rate. So shop around for rates, see who's going to give you the best deal, bang for your buck. But most definitely, now is the time to go ahead and move forward in that direction of home ownership because the rates are really still really low.
Awesome. So how can someone get into the investment part of real estate if they're looking to do so?
So honestly and truthfully, investment, if you want to become an investor, the first thing that you most definitely need to know is what type of investor do you want to be? Do you want to be an investor that's going to buy and hold, where you want to be a landlord, or do you want to be an investor that's going to flip? Or do you want to be an investor that's going to be joint venturing, where you basically are purchasing properties with others and you guys are doing a joint venture on the purchase? So that's the first thing that you need to decide. What type of investor do I want to be? The next question or the next thing that you need to ask yourself is, where's my money pool? Okay. Who will be financing these properties that I want to buy? And then finally and foremost, which is very, very important, you really need to know what are the required contractual forms that you need in order to have a real estate deal done. If you want to basically work with an agent, which I most definitely will highly recommend, you need to basically partner with an agent that is familiar with investments and how they work, and to also partner with an agent who's going to get the deal done. Because working with investors sometimes can be very challenging. So you want to you want to be able to align yourself with an investor-friendly agent. And then last but not least, always be thinking ahead, thinking about the next deal, because you don't want to be a one and done investor. That's not the true meaning of real estate investing. So, those are the things that come to mind for me when I'm, talking to someone who's interested in becoming a real estate investor. I just basically give them that forefront information and just say, hey, these are the basics. And then once you basically gotten those down pat, then we can sharpen your iron and, get you to the point where you're a professional.
Awesome. Well, thank you so much, Ms. Alicia, for sharing these good and helpful tips about real estate, buying homes, and investing. I'm going to share the social media handle so we can tell our listeners how you can be reached. Let's see. So tell our listeners how we can reach you, Miss Alicia, if we would like to render your services.
Oh, most definitely. Well, first and foremost, you can always find me on Facebook. I am Alicia Stukes, Real Estate Rainmaker. I am also on IG as the DMV RE Rainmaker. You can find me on Twitter, and I had two handles on Twitter, DMV RE Rainmaker and Glam Property Pro. You can also reach me online, and that would be Alicia Stukes altogether .exprealty.com. And then also too, you can always shoot me an email. I am Alicia Stukes, real estate rainmaker at gmail.com. And I think that's every place that you can possibly find me.
And if you want to get in contact with me, my number is 910-317-0396. You can call, text that number. You can email me at contact@mjfinancial.biz. You can visit the website, www.mjfinancial.biz. And you guys, you can find this episode on Anchor, and you can find this playback of this video on the YouTube channel for M&J Financial Management. So thank you so much, Ms. Alicia, for being on the show today. I highly appreciate you.
Thank you for allowing me to be a guest and to share my expertise in the real estate industry.
Yes, ma'am. And all right, you guys, we will see you on the next episode of Tips with T.